This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you are not ahead, you are under. It is Friday morning, 22nd of May, 2026. We are wrapping up one of the most brutal trading weeks in recent history. The overnight data confirms that the global financial system is fundamentally rewriting its own rules. Let us get you caught up for the Friday open. First up, the 60-second commodities flash. Brent has officially pierced the $120 per barrel threshold before settling slightly below it. The physical squeeze is absolute, and any paper shorts left in the market are being annihilated this morning. WTI is holding strong above $115 per barrel. Next, the non-dollar oil pact. Overnight, highly credible reports leaked that major Asian economies, led by India and China, are finalizing an emergency clearinghouse. They are preparing to settle shadow fleet and sanctioned crude imports using a basket of local currencies heavily backed by physical gold. Meanwhile, tech is dealing with a massive Black Thursday fallout, following yesterday's bloodbath triggered by corporate zero inventory disclosures. TSMC officially announced it is extending its force majeure indefinitely. The tech sector is bracing for a wave of catastrophic Q3 downgrade reports this morning. This has created a violent decoupling for spot gold. Despite a surging DXY, gold has firmly established a new floor above $4,900 per ounce. Sovereign nations are dumping dollar reserves to hoard the physical metal required for these new shadow oil transactions. Finally, shipping rates are going parabolic. With the Strait of Hormuz closed and the Taiwan Strait heavily blockaded, the Drewry World Container Index saw its largest single-week spike on record. Moving anything anywhere is now a luxury. The Drewry World Container Index saw its largest single-week spike on record. Moving anything anywhere is now a luxury. Let us take a deep dive into the forced de-dollarization of the energy trade in Asia and the ongoing implosion of the tech sector's growth narrative. For decades, the global macro playbook was simple. Oil is bought in dollars, and tech drives the index. As the opening bell approaches on this Friday morning, both of those fundamental laws are breaking simultaneously. Consider the forced SWIFT bypass. We warned you on Wednesday that emerging markets were bleeding their foreign exchange reserves dry just to buy $115 oil. By hitting $120 per barrel, the breaking point arrived. India cannot afford to drain their US dollar reserves without risking collapse. The newly proposed Asian clearinghouse is born out of pure desperation. By agreeing to trade physical goods for physical gold, the Hormuz tax has won. By agreeing to trade physical goods for physical gold and local fiat, the Hormuz tax has achieved in 3 months what the BRICS coalition has been trying to do for a decade: structurally fracture the petrodollar system. Now look at the tech black hole. Wall Street is finally capitulating on the AI supercycle narrative. You cannot build data centers with software. You need hardware. And that hardware is currently trapped behind a ring of warships in the Taiwan Strait. The realization setting in this morning is that Q3 and Q4 revenues for the Magnificent Seven are not just delayed, they are evaporating. We are transitioning from a valuation pullback to a fundamental revenue crisis. If tech cannot source its silicon, the growth thesis is a black hole. This brings us to the end of the paper illusion. Look at the divergence between paper assets and physical reality today. Paper tech equities are crashing because they rely on fragile, hyper-optimized global supply chains. Meanwhile, physical commodities like oil, copper, and gold are surging because they are tangible assets in a world that is rapidly balkanizing. If you hold a paper derivative for a commodity, you are taking on massive counterparty risk. If the oil cannot clear a port or the gold cannot be delivered to an Asian central bank, the paper contract is worthless. Here is the TradeFlow take. Fridays in a crisis market are notoriously dangerous because no one wants to hold unhedged risk over the weekend. Expect massive profit-taking in the tech sector into the close today as portfolio managers run for safety. The shift away from the dollar in global energy markets is the ultimate signal. Physical, decentralized, and sovereign-backed assets are the only safe harbors left. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.